This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay guys, let's take a brief look at the gold market. In fact, there's currently not much to discuss right now. The one thing that I would like to say is that our suspicions yesterday that we have announced concerning that market does not behave as it should when it forms the bearish pattern, and mentioning the three period rule again has saved our money, because as we said, if market does not follow the direction that it should to follow according to the patterns that it has formed, this is the warning sign, and you should not take the position in a direction with these patterns if market does not show this action within the 3 period after they have been formed. And you should not take the position, and you should close the positions if you have taken the position with these patterns. That has happened again, so you can see bearish engulfing pattern. That was also the stop grabbers, but market has not followed with this direction, and instead of that, as you can see, yesterday has turned up again and taken out with its highs, erased these patterns. Recall guys that this also was the 618 fib resistance and target of the ABCD pattern, and market has passed through this resistance as it now exists. Just minor consolidation has been formed here. This tells us that how strong market is, and I suspect that probably we should search the possibility to take the long position here. Well, currently nobody will take the responsibility to predict what will happen, because in the end of the current week and the weekend we will get the referendum in the Crimea in the Ukraine. What will follow after that, it's really could become the Pandora box for the gold market, and depending on how situation will develop, this could lead to significant volatility on the gold market. But technically, when I see that market is passing through the agreement resistance as it now exists without no respect to this area, this tells us probably that we should search possibility to take in the long position. Currently, market is approaching to another resistance. In fact, it stands in some resistance cluster between the 1340-1360 area. The 1340 area is the 618 extension of the ABCD pattern on the weekly time frame chart. For those of you who read our weekly research, you probably remember this. But the 1360 is the monthly pivot resistance one and yearly pivot point. So if market will pass through it, the next target will be 1540 area. That is our optimistic scenario of the retracement of the gold market that we have discussed within the 3-4 months already in a row, that we said that as on the monthly time frame chart, gold has hit a significant oversold condition, and if market will start the retracement up, and that retracement has started, following the habits of the gold market, we can't exclude that in the positive scenario retracement could reach it as far as the 1540 area. And currently we stand at the moment of truth, so the market will pass through the yearly pivot point, and the long-term sentiment will shift to the bullish side. The next destination will be yearly pivot resistance 1, and this level dramatically coincides with the other levels, another destination point. So if you're interested with this, read our monthly analysis. We have discussed these moments with the details there, and currently we are approaching to this area. So appearing of this resistance level could give us the nice possibility for taking the long position if market will show some bounce out from this area. But again, trading the gold market is a real challenge right now due to the volatility, and not everybody could hold and could accept such volatility from the money management standpoint. That's not possible for everybody, especially with using the leverage on the gold market. It really could be a very expensive issue to trade gold market right now. So shortly speaking, our current destination point on the current week is the 1365-1370 area. That's the next level. Depending on what we will see here, will tell us what to expect in the nearest future, whether we will get retracement or not, whether the market will pass it right as it now exists or not. So if even we will calculate the extensions of this recent retracement, you'll see that 1618 extension stands in the same area. Maybe market will form some head and shoulders here and a shoulders retracement down. I do not know. But the fact that market is passing through this resistance and the existence of this level could give us the reasonable bounce and let us to take the long position on the gold market, because hardly in the nearest futures the geopolitical turmoil will fade and market will return to its own. I suspect it's not, especially taking in consideration that market now stands at the seasonal bear trend. But do you see any bear trend right here? Well, that's why probably we should be ready for taking the long position, because market absolutely doesn't respond on any bearish patterns that have been formed here. That is also tells us that the strength of the markets, and that these issues with the geopolitical tension also get fuel to the market, and I think that this will hold for some time more on here. The second important moment is that the United States economy is leaving the winter season, and the recent data release has confirmed that maybe it's not as bad in the United States economy as it was on the previous data. Previous data suggests, and if some improvement will follow in the United States economy, the inflation also could start to rise. That also will fulfill the markets. Will add some fuel to the market, to the gold market, because you know the gold market is in fact the mirror of the inflation, and it's mostly driven by the inflation. Well, that's why I think that probably we could meet in the nearest future the significant bullish action on the gold market. So we'll see what will happen. But in the nearest future, in the short-term perspective, the major point that we should watch for is how market will respond to this area. On the 4-hour time frame chart, we see this action again, guys. We have got again this hidden bullish divergence with these lows and that lows on the MACD indicator, and again we've got this continuation to the upside. Our yesterday setup of the butterfly sell has worked excellent, so you can see market has hit the level, and after that shows this retracement. So short-term setup with the butterflies has worked perfect, we have discussed yesterday. So you can see here is also will stand the upward border of this channel, will also coincide with the levels that we have discussed on the daily time frame chart. So let's see what will happen. Let's see what market will show in this area. So as you can see, it's about early. Again, it's early to take the short position, and it's too late to take the long, because market is approaching to this level, at least following the technical points. Maybe from the fundamental points and taking into consideration the geopolitical tensions, maybe it's all this time is suitable for taking a long position. It's not such issue as the too late for the gold market to take the long position in the current circumstances. Maybe that is true, but following the technical analysis, when the market stands to the resistance, it's not quite reasonable to take the long position right here. So maybe we will get lucky and market will give us some retracement down for taking the reasonable long position here. Let's see what will happen.